Well, hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Well, it's not turning out to be a great morning when it comes to the global markets, given the fact that we saw a steep sell-off last night on Wall Street, and Asian markets are also mirroring sentiment and, trending lower as we speak. And European markets also shut shop in the negative territory. We'll have to see where we, manage to trade in today's session, which is the penultimate session ahead of the FNO expiry. But of course, over the next 30 minutes, we'll be talking about all the stocks that are in focus today, including the likes of Suzlon, Vedanta and Infosys. And we'll also be taking up all your stock-related queries with our technical expert on the show. So if you have any queries, send them in to us on our YouTube feed and we'll try and take them up. But before we go any further, let's take a look at the top headlines at this hour. Global markets reel under pressure on Wall Street. Dow sees its worst day since March as weaker than expected consumer confidence data takes a toll. European markets too end largely lower while the Asian markets are trading mixed this morning. The GIFT Nifty is hinting at a lower start for the Indian market, a cut of somewhere around 50 points or thereabouts. Oil prices come off two-week lows with the Brent ending above that $94 a barrel mark. Expectations of tighter supply outweigh concerns over the health of the global economy. Moody's downgrades Vedanta Resources corporate family rating with negative outlook. Meanwhile, Dilip Sanghvi and associates terminate an amended and restated shareholders agreement to capitalize Suzlon. However, he remains a shareholder in the company. Meanwhile, Morgan Stanley is upbeat on IT stocks, citing strong outlook on FY25 revenue growth. And government releases its borrowing calendar for second half of the current fiscal, estimates that it will be borrowing 6.55 lakh crore rupees as was the plan, including sovereign green bonds worth 20,000 crores. The government will also issue 50-year bonds for the first time. Let me first bring on board, our technical expert for today. Joining me is Hemen Kapadia, who's the Senior Vice President, Institutional Equity at Choksey Securities. Good morning, Hemen. Great to have you on the show as usual. Looking at the global setup, things are looking pretty bleak. And, yesterday we did manage to hold our heads above that 19,650 mark. But looks like today we are at risk of taking out even 19,600. What's your own prognosis?
A very good morning to you, Nandita. Thank you for having me on the show. It's always a pleasure. Absolutely right. We've been down for 6-7 trading sessions in a row. There have been a couple of gaps on the daily chart which probably need to get fulfilled. Otherwise, it doesn't augur well for the market. We have a monthly expiry. We have a long weekend. We have a semi-holiday tomorrow. But like you said, 19,600 has held so far. Frankly speaking, it has been a cushion, a relief. Now, that breaks intraday, I wouldn't be too unduly worried. We are coming off from 20,200 odd, Nandita. So if it breaks intraday, fine. But if it closes below it, I totally agree with you. We are going to be in a spot of trouble. 19,524 is a support. Beyond that, there is also the 55-day exponential moving average, Nandita, which comes in at 19,516. So there are a couple of more data points over here, which would seem to indicate that just slightly below 19.6 are levels which would probably provide the necessary respite for the Nifty to hang on. But yes, on paper, if it closes below 19.6 today, it doesn't look too good, Nandita.
All right, Hemen, on the Nifty Bank, what are the levels you'll be watching out for today, given the fact that, we have seen some bit of underperformance coming in on the Nifty Bank index, at least vis-a-vis the Nifty PSU Bank index. So where do you expect Nifty Bank to take support?
We saw an upward key reversal coming in the day before, Nandita. That's technically a small positive reversal. But now it didn't percolate down to the price action. Yesterday, the Bank Nifty remained within the previous day's trading range. Technically, you'd call it an inside day. But moral of the story is, doesn't inspire confidence. And the upward key reversal, frankly speaking, flopped. So levels for 44,483 is important support on the daily chart, followed by 44,152. If things need to improve, we need a close up of 44,950 on the daily chart for a bounce back. Despite everything and the doom and gloom, I still feel that maybe if not today, tomorrow, there would be some short covering coming in. It's a long monthly expiry, and we are closer to a clutch of support level, Nandita. So not today. Tomorrow, I'd see some short covering coming in the market.
All right, that's the view then on the Nifty Bank, on the technical setup when it comes to the Nifty as well. With that, stay on. Hemen, we'll come back and talk about specific stocks and also take up our viewer queries. But before that, let me also bring on board our next guest for today, Nirav Karkera, Head Research at Fisdom. Is joining in this morning. Good morning, Nirav. I want to discuss a couple of stocks with you. The likes of Aisha Motors, Varun Beverages. They've seen a good run yesterday, given the fact that we had positive brokerage reports coming in on some of these stocks. But starting with Aisha Motors, competition, intensifying competition in the premium bike segment. That was one overhang for the stock. But, given the fact that brokerages believe that channel checks are suggesting that the competition hasn't really had that big an impact on Aisha, or because of, the launch of Hero Harley as well as Bajaj Triumph. So that's one big overhang removed, right? Given that, would you suggest, or would you say that Aisha Motors is on track for, reversing the kind of underperformance it has seen vis-a-vis the auto index on a YTD basis? And valuations wise, how is it looking now?
So thanks, Nandita, for the context. I feel you pinned it right on point. There was a really massive overhang on the Aisha Motors stock. And we all know that most of Aisha Motors value is derived from the two-wheeler segment, and the launch of collaborated premium bikes in the segment had applied quite some bit of pressure on the expectations of sales of Royal Enfield going ahead. However, like you rightly said, even channel checks, not just as suggested by the brokerages, but also by other independent analysts, suggest the same, are all in the same line that, competition has not really been able to catch up as much as initially expected. There was a lot of euphoria at the very start, wherein one expected this entire premium segment to be then diversified amongst the top three players, which included Aisha as well. But that's clearly not happening. In fact, if you were to look at the initial booking numbers vis-a-vis the booking numbers for Royal Enfield for the same period, especially since some of these co-branded and joint bikes were launched, you'll see that the booking numbers are pretty low, versus the normal sales numbers that Royal Enfield continues to post. So there's been a lot of resilience there. There is definitely tailwinds to the two-wheeler segment. The two-wheeler segment is in a very sweet spot at this point in time. We are expecting some very robust demand recovery in the segment. At the same time, it is very clear that premiumization is going to be a key, vector to look at going ahead. So the overhang is, slowly and gradually easing. So it is just that a brokerage called it out just now, but we have been seeing it since quite some months now that competition is not quite as intense as it was appearing to be. So at least since the past couple of months, the setup was already in the brewing. You see the valuations also from this perspective, and looking at the growth expectation going ahead is fairly positioned. I wouldn't say that it is really cheap, but it is very close to reasonable, at least versus peers, versus category peers. So one can definitely see some run up in terms of shorter term momentum. If you look at a few, short term momentum indicators like the probably like the oscillators or moving averages, it will point to some, bullish momentum being created in the shorter term. However, one can expect this to extend and extrapolate in the medium term as well, especially through the end of the financial year, as the demand that is just expected actually starts manifesting into a reality. So yeah, so far, there continues to be, macro risks to the sector overall, stemming from, any risks to overall aggregate demand or consumption in the economy. But apart from that, very specific to Aisha Motors, we believe it is at a very sweet spot, and one could definitely look at some upside going ahead.
All right, Aisha Motors in a sweet spot. But let me also talk about Varun Beverages. That stock was up somewhere around 5% yesterday. Once again, there was a bullish report, but, the BofA in fact, has pegged a target of above 1,000 rupees on the stock. Of course, the stock appears to be rather expensive given the fact that it has a 12-month trailing PE of 60x or thereabouts. But would you also say that it still offers some bit of upside going forward, or would you wait it out for some bit of rural demand recovery to kick in, or the kind of erratic monsoons that we have seen this season? So perhaps would you wait for the adverse season to pass and then give a decisive call on the stock, or would you also have a rating of buy on the stock?
So Nandita, I'll tell you one thing at the outset. This thing about valuation, valuation lies in the eyes of the beholder. So while it does indeed look expensive at this point in time, the real question is, will it be able to sustain and grow beyond, considering what lies ahead for the company? So there are a few things that one could bear in mind. One thing that Varun Beverages has definitely had a stellar record of returning very good value to shareholders almost since the longest period of time that one can recollect on an annual basis. Intermittently, it will face imminent risk. Like very recently, you correctly pointed out, there were certain adverse headwinds to the sector, especially on account of erratic monsoon up in the north and the demand being slightly subdued. But at the same time, most of it is being offset by some very strategic maneuvers by the company. We should take into account the fact that the company is being really focused on expanding its distribution network. It is entering newer territories. It is committed to capex and new setups, and it has all the financing in order to fund such capex aspirations. It is already in line. At the same time, it has international aspirations. There were talks about its expansion and foray into international regions, for instance, South Africa, that is yet to really take full form. And also, let's not forget, as long as we are talking about the the consumer segment and the festive season in India being right around the corner, with the World Cup also coming in. Obviously, this is in most cases this could be anecdotal, but there is some serious seasonality of these events in the consumer segment. So definitely, I wouldn't say that it's a value pick. There is most of these upside is aggressively priced in. However, there is a higher probability for surprises on the upside. Considering the investments that the company is making, considering the expansion in their distribution network, and the improvement in the product mix, wherein high margin products are also being introduced with a heavier weightage into the mix. And there is clearly a very focused push on such high margin products and the distribution of such high margin products, whether it be in the energy drink segment or in the sports drink segment or alternative dairy segment. You are seeing a lot of focus, push and penetration, a very strategic push across the distribution channel. So all of this is expected to culminate into significant upside going ahead. In fact, while the upgrade reflects a 10 to 11% upside, one would expect it to be in the medium term. I personally wouldn't be surprised if the stock is able to surpass the target suggested over the medium term, especially as we exit this financial year. So valuation wise, yeah, it makes sense to be slightly cautious, but growth potential wise, it still seems to be well positioned to embark upon a newer trajectory of growth going ahead.
All right, so a lot of fizz left in Varun Beverages, as I can gather from your comments, Nirav. But, very quickly, one last talk on my radar, that I want to discuss with you is Strides Pharma, given the fact that it had got a USFDA nod for a drug, and we saw that play out in Monday's session. But, after that, we had an announcement that it will be spinning off its CDMO business into a separate entity that will be listed over the next 14 to 16 months, right? So that is value unlocking. But the street wasn't really very, receptive to that bit of news. And in fact, we saw a negative reaction come in to that. Would you, what is it that that is seeming to be so disappointing, at least, because value unlocking for a company is something which, shareholders really, take with heart, right? But this time around, it seems like shareholders are disappointed. What's your thought on that?
So Nandita, this is something that we have also been talking about internally. We realize that it is indeed value accretive. It is indeed a story of value unlocking, like you correctly pointed out. However, if you look at the correction post announcement, I feel it is a matter of slight happenstance and a little bit to do with the news also, wherein the US FDA news was fully priced in, and this value unlocking story was also being aggressively priced in since quite some time. And just about the time where the news broke, the stock had delivered a very decent upside, in the shorter time frame. So this somehow, I believe, the turning of the sentiments into the negative zone and some bit of profit taking coincided with the session post the news that was broken. So we still look at it as value accretive going ahead. You look at the few key components of how the deal was structured, and what are the segments that they are culling out, and how the almost $35 million worth of debt is going to be pushed down into the subsidiary. The leverage ratios are going to improve, gearing ratio, coverage ratios are going to improve, interest coverage is going to look far better for Strides Pharma going ahead. This is actually value accretive. However, we believe it will take some time for the same to be reflected in the stock price as well, because one needs to bear the context in mind also. The past couple of trading sessions, like you mentioned at the open of the show, has not been quite upbeat, to say the least, right? So we believe it will take some time for such value unlocking to actually reflect in the share price. And the timeline also shared, of 16 to 24 months, that also was quite a time period that was guided. So investors at this point in time are, as it is, jittery and are running low on patience. So there could have been a bout of profit taking in the shorter term, but we can expect this value to be realized as the as the plan and the deal progresses.
Right. With that, we are running out of time. Nirav, thanks a lot for sharing your insights on, all the stocks on my list today. Look forward to connecting with you sometime soon.
Thank you.
Well, with that, let's go back to Hemen, who's been waiting by patiently. Hemen, I want to talk about the stock of the day, Infosys and the entire IT pack, so to say, given the fact that, Infosys has tied up with Microsoft now for generative AI. Recently, it tied up with NVIDIA as well. And of course, the company is reporting its earnings, second week of October as well. If you look at the shares of Infosys, they have gained somewhere around 10% since June. I think that's the first quarter. Good comeback after, the kind of guidance it gave in the first quarter, right? But today we have a bullish report coming in from Morgan Stanley on the entire IT pack, wherein it has revised target prices higher for the likes of TCS, Infosys, HCL Tech. But Tech Mahindra is one that it has downgraded. But it believes that margin improvement and double-digit EPS growth should keep valuations afloat, and FY25 revenue growth outlook looks pretty strong according to Morgan Stanley on IT. What are your thoughts on how one should be playing the entire IT basket ahead of the earnings?
Well, like you mentioned, Infosys was probably the weakest of the lot, but now we are up for almost 6 months in a row from the low. If there are any positives in the results, I believe somewhere they are built into the price here. Most of them have moved, and if you look at the mid-caps, IT stocks, Nandita, whether you look at Persistent, you look at Coforge, you look at Birlasoft, Intellect, many of the stocks have actually shot through the roof. I think there needs to be a fact check. There has to be the laws of gravity playing out. So firstly, on technical parameters, around Jan 2022 was when the IT NSE Nifty IT index sort of gave technical sell signals. And around a couple of months back, this is September, so I think mid-August types, we saw a long-term reversal as far as the technical signals are concerned. Now, if you look at, if I were to take a 1.5 2 year point of view, Nandita, I think I would be positive. Wipro is one stock which stands out. Time being, Infosys has made a lower top, lower bottom on the daily charts. Mechanical indicators like the MACD, RSI, stochastic, at the risk of getting too technical, have given a crossover sell. So we've slipped into a small correction. Currently, we need to take out 1520. Before that, 1480. If anything significant is going to happen. So extreme near term, I believe there is a small technical negative overhang on most of the IT stocks. From a longer term point of view, yes, I think clear technical green shoots on the longer term charts as far as the IT index is concerned, and most of the IT stocks.
All right, that's the view on IT. Wipro looking, the best out of the lot. But let's talk about, the stock of the moment. I would say Suzlon. That stock is in focus given the fact that Dilip Shanghvi, has terminated the 2015 pact that it had signed with the company. In fact, it had been reinstated in 2020, and that has, now been terminated. So Shanghvi and Suzlon were to form an equal JV to develop a 450 megawatt wind farm. The thing is that even though the pact has been terminated, Dilip Shanghvi has said that he will continue to be an investor in the company, and he's pretty much bullish on the prospect of wind energy as well going forward. But do you think this will come as a negative? In at least in the next few trading sessions, given the fact that Suzlon has managed to turn around its business and had come out with the rights issue as well, and it has been retiring its debt as well, right? But for an investor who wants to invest in the stock right now, do you think it's not the right time, or do you think since the company has been turned around, this is the right time to buy and use the dips to probably accumulate for the long term?
Absolutely, Nandita. I think I totally agree with what you said. Yes, there could be a near-term hiccup. Sentimentally, yes, I think you have a marquee investor. Okay, he's supporting. He said he's going to remain an investor. He's bullish, but there could be a small hiccup. Having said that, like you said, if there is a clear turnaround, like there is, Nandita, I think the dips should be used to buy. But I believe this would be a slightly longer-term point of view. Currently, Suzlon has moved up from 7 to 27. In the last 7 months or so. So currently we're a tad bit overbought. Yes, on technical parameters, there is strength. This stock is from the rounding bottom on the longer term charts. We formed what is possibly a 9-year high. So since 2014, there's the best situation technical wise Suzlon has been. But the move has been very sharp, and something like this might induce a small temporary blip. So use that to buy. But once again, this is a shorter term point of view. Near term, we moved up very sharply. Is this going to give an excuse for the stock to slip into a corrective phase? Too early to say. If 27 gets taken out, nothing matters. We continue. But if it doesn't, we might just slip into a small consolidation. So yes, buy the dips, but only if you have a longer term point of view. Nandita.
All right. We had a query on Suzlon on our feed. I hope that answers your query. But let's also take up a query on Delta Corp. Yash Naik wants to know your thoughts. Of course, the stock is down 48% in the last 3 months. There have been hiccups. Of course, GST demand notice of over 16,800 crore rupees. We have seen the stock reaction come in. But what is your own prognosis? Completely avoid this stock, and if you're invested, book losses. How should one approach it now?
I think if one looks at the figures, they're frightening under them. I am not sure if they're practically implementable, but I'm not the right person for that. Technically, 140, 120 support levels. We've virtually fallen off a cliff. There has been huge volume in the last 2 trading sessions, Nandita. On NSE, once again, these are not delivery marking, these are gross volumes. 6.5 crores on Monday and 4.72 crores on yesterday. So huge volumes, and we somehow have managed to hang on to the 140 level. So time being, I'd say wait just a bit. If you're a new investor, avoid, because if there is a news related controversy like this and you don't know how it's going to play out, stay away. If you're an investor, hold just a tad bit. I believe a bounce is around the corner. If the bounce doesn't sustain, I think that's the time when you can take a call to exit, because okay, looking at the way it is fallen off a cliff, it's very clear that technically everything has turned negative and it's a sell. And the volumes, like I said, the heartening thing is there's been very high volumes at lower levels, and somehow the levels have held. So I would say time being, the knee-jerk reaction, the panic to the news probably is out of the system.
All right, that's the view on Delta Corp. Hope that answers your query. We're running out of time, but I want to squeeze in as many queries as I can. Wasim Ahmed has a query on Vedanta. Of course, we've seen Moody's downgrade its parents' corporate family rating on the back of debt-raging concerns. Looking at the charts very quickly, where do you see it heading from here? It's a negative, at least in the short term, and debt repayment, of course, remains an overhang for the company.
Oversold on the daily chart, Nandita, that hasn't helped. Support at 220, if 220 break decisively, support at 205. Short term, medium term remains in a downtrend.
All right. The next query is coming in on Tilaknagar Industries from, I think, Naveen. And he wants to know your thoughts on where the stock is headed. So, any short-term targets you'll be watching out for on this stock?
Seems like a small distribution pattern on the daily chart, Nandita. What I would say, it looks like profit booking. Instead of an upside target, let me see how much it corrects. If there is going to be an upside target, we need a close above this 220, 225 congestion area. Before that, we probably break 195. That happens, we'll see further downside.
All right, that's the view then. Hope that answers your query. But let me also take up a query on SBI from Michael. Wants to know your thoughts on this stock. Of course, among the few banks, this this heavyweight has been an underperformer if you compare it with the likes of an Indian bank, Bank of Baroda and thereabouts. But do you think now on the charts there could be a breakout and perhaps it could try to match up to some of these smaller counterparts?
Absolutely, Nandita. And go with your thought process. It could play catch up. Looks like it spent 11 months doing nothing, underperforming in a range between 500 and 630. If and when we take out 630, it will, I'm sure it will catch up for the time it hasn't performed, but currently hasn't yet broken out and continues to lag.
All right, one last query then. This one is coming in from Rajiv Menon. Wants to know your thoughts on Ujjivan Small Finance Bank. Hemen, what would you advise him to do?
We remain in an uptrend, currently overbought, but a lot of relative strength. Longer term point of view, think the positive. Currently support is 47.5 and 53. Close above 53 upside. The correction is moving sideways. Undercurrent good. One way up. I'd be cautious.
All right, that's the view then. With that, I think we are completely out of time. So this wraps up our query segment. But Hemen, before I let you go, what are your stock recommendations for viewers this morning?
Markets are wobbly, Nandita, not very trending. We seem to have taken a breather. Breather might take a week or two more. So two recommendations, both are from a slightly intraday point of view. Once again, they are, if there's a gap up or gap down, I think one should not chase the stock. Firstly, a sell call on Infosys at 2445. Stop loss 2470, target 2395. Lower top, lower bottom, indicator crossover sell, negative divergence. Secondly, a buy call on HDFC Bank, a contra trade, deeply oversold, Nandita. Last 3 days, it hasn't broken 1525. Intraday charts seem to indicate strength. Intraday charts. So a buy on HDFC Bank at 1535, stop loss 1525 and target 1555. Nandita.
Right, a contra call coming in on HDFC Bank, which has of course been under a fair bit of pressure since last week. With that, Hemen, as usual, it was a pleasure having you on the show. Look forward to catching up with you again sometime soon.
Okay.
Well, with that, we've come to the end of this edition of Morning Trade. Thanks a lot for tuning in. We have two new listings today, Sai Silk as well as Signature Global, listing at 10 a.m. So log on to our website and see what analysts have to say about these new listings. But with that, it's a wrap. Thanks a lot for tuning in from me and the entire team. Wish you a very happy trading day and come back for opening bell that comes up next.